What's up everyone, welcome back to another video with the Millennial Finance. This will be a follow-up video on a previous one that I recently posted about decentralized finance as a whole. Let's talk about investments and their returns. First of all, at the lowest risk level, there is a saving account and fixed deposits, but since interest rates are low now, the returns there are also low. Money market funds are liquid, I like them much better than fixed deposits, but again, they just give enough returns for us to sort of combat inflation instead of outpace inflation. For Malaysians, there's EPF and Amanah Saham, which are basically risk-free investments giving us 5 to 6% per year, and these are considered the gold standard for savings. Moving past savings, if you talk about something like the S&P 500, this gives us an average return of around 8% per year, of course with some volatility here and there. So with DeFi though, like I said, there are a lot of opportunities out there, and the one that I'm going to be talking about today mostly, which is called the Anchor protocol, gives us a guaranteed 20% return per annum. Many people consider them to be almost like a bank in the crypto space, and it is also considered one of the safest DeFi yields out there in the market. Today, I'll go through exactly what it is, what are the risks involved, and how you can get started. Cha-ching! Before we start, if you want to buy some crypto, which you will need to if you want to participate in this Anchor protocol, then sign up for Huobi. You can use our link down in the description below and you'll get 5% off your trading fees. Anyway, what is Anchor protocol? Anchor is a dApp or a decentralized application on the Terra blockchain. If you guys did not know, the Terra blockchain has Luna as its native token, which currently has the 6th largest market cap in crypto. Yes, you heard that right. Luna is now a bigger coin than Solana, Polkadot, and Cardano, as well as many others. Recently, in fact, a lot of coins, just like growth stocks, have been in a downtrend for a very long time, but Luna has bucked this trend and the price action is looking really healthy. Another very important aspect to the Terra protocol is UST, which is a stablecoin similar to the USDT and USDC. The one difference of UST is that they are not backed by any fiat currency. Instead, they're algorithmically pegged to the US dollar by rewarding arbitrageurs. I won't go too deep into it because it can be a bit complicated, but if you guys want to do some research, there are a lot of resources out there. So you must be thinking, why am I talking about all this gibberish? Well, it's really important for us to know this to take part in the Anchor protocol. This is because if we want to deposit into Anchor and earn the sweet 20% returns, then we must deposit in UST and not Luna. This is actually better for us because UST is a stable coin whereas Luna is not. Why this is important is because if we want to consider this our savings account, even though Luna is a good coin, yes, we don't want the price of our coin fluctuating 5-10% every single day. Take a look at the chart of UST compared to USDT or USD, and it is pretty much flat. 1 UST equals to $1. This is exactly what we want when we're looking for a savings account because we want the highest yield possible with the lowest risk. Anyway, back to the Anchor protocol. Like I said, it acts like a bank. On one hand, it allows any user like ourselves to deposit UST into it and earn some returns on it. On the other hand, someone else can now go on to the Anchor protocol, borrow some UST, and put another asset as collateral. Simple, right? Like I said, it acts just like a bank. Anchor is so big though, and it plays such a pivotal role in the Terra ecosystem that many people think without Anchor, Luna would not be where it's at today. Looking at their total value locked, they have $15 billion worth of assets on their protocol, which is massive, and this is fast growing every single day. So enough context given, let's get straight to the juicy part, which is how do we get the 20% returns? If you take a look at Anchor's earn page, the returns right now is actually at around 19.44%, and it has been stabilizing around this mark. I just put 20% because I wanted to clickbait you guys, and yeah, you won't be getting the extra 0.5%. Anyway, the Anchor team is trying to commit to creating a sustainable ecosystem that can give all depositors 20% returns per year for the long run. Right now, all we have to do is to deposit our UST to earn this huge return. I'll show you guys exactly how to do it later on in this video, so make sure you stay till the end. So how do they give us this nearly unbelievable returns? Well, they do so by giving out loans. There's a borrow tab on the website itself as well that allows you to borrow UST by providing collateral of Luna or Ethereum. As mentioned before, loans in crypto is over collateralized, meaning if I wanted to borrow 500 USD worth of Anchor, I would need to put around $750 worth of Luna or Ethereum. So why would people want to do this? I've mentioned this before, but let's say as an example, I'm extremely bullish on Ethereum. I don't want to sell it. I know that's going to go to the moon in the next 5 years, but I really need cash right now to buy food. Well, in this case, what I can do is take my Ethereum, provide it as collateral on the Anchor protocol, get some UST, convert it to Malaysian ringgit, go out and buy food, and when my paycheck comes in, I can then take this money, pay Anchor back, and get the exact same amount of Ethereum that I used to have. Right now, borrowers have to pay a 13.05% fee per annum to borrow this money. So there's clearly a gap between how much borrowers pay and how much depositors earn. The difference of about 6.5% is currently supported by the Anchor Yield Reserve, which currently sits at $450 million. Well, why would the Anchor protocol want to give 6% to us users for free? Well, the answer is simple. At this moment, their main objective is to get as many users onboarded to the platform as possible, both lenders and borrowers. And like I said earlier as well, they have a long-term goal to create this sustainable 20% returns. Over time though, they're looking to bring in more borrowers by allowing them to deposit more assets such as Solana and Atom. Anyway, as lenders, we don't really have to care about all of this. All we got to do right now is deposit our UST, and yes, we will get our 19.5% returns. The only thing that I would really watch out for is the Anchor Yield Reserve. It recently nearly got to zero, but the Terra team actually pumped in $450 million. My guess for the reason they did this is because, like I said earlier, Anchor is just so important to the entire Terra ecosystem that they don't want to see it fail. However, even if the reserves one day go to zero, at this rate, we will still get around a 13 to 14% return, which in my opinion is not bad at all. So I've talked about all the good things regarding Anchor. Sounds too good to be true, right? Well, as usual, there are risks with it. Especially in the crypto space, there's no such thing as a free lunch. The first risk that all lenders may face is that if the UST depegs against the US dollar. So like I said right now, the UST is always equal to $1, but one day it could depeg. Since it is not backed by any real money like the USDT is, we can't technically guarantee that 1 UST will equals to $1 forever. Right now, everything is working smoothly. They haven't had any issues maintaining this peg. But one day, if there is a sudden loss of confidence into the entire Terra ecosystem, and if the Luna price drops by too much, then I do see the possibility that UST depegs from the US dollar. However, I would think that this risk is pretty unlikely at the moment because the Terra ecosystem is already so established, and like I said, the Luna coin is already ranked the 6th largest crypto by market cap. So the second major risk, if you decide to invest your money here, is with regards to a hacking of the smart contract. This would be an absolute disaster for not only the Anchor protocol, but also the Terra ecosystem as a whole. So I can't say for sure what is the likelihood of this happening currently because I didn't really do any audits or anything like that. But I do know that there are many companies and individuals out there who are doing just that. So far, nothing has happened. They have never been hacked before. But just because it didn't happen before doesn't mean it can't happen in the future. A cool feature in the Anchor protocol is the fact that you can actually buy insurance on both the risks that I just talked about. So I did do some research on it, but I haven't bought any insurance. And the reason for that is because it's on the Ethereum blockchain. The gas fees are very high. And also I don't have that much money that I put into the Anchor protocol yet that I would consider a need for insurance. I know a lot of investors who do have tens and even hundreds of thousands of dollars in the Anchor protocol and they do buy insurance, so yeah, that would probably make more sense. Anyway, enough talking, let me show you guys exactly how to use the Anchor protocol. So the first thing that you need, as with everything related to Web3, is the Terra Station wallet. So to transfer Luna or UST to a separate wallet from your exchange, you cannot do it through MetaMask. They don't support the Terra ecosystem right now, so you have to download this extension called the Terra Station wallet, create your wallet, and then transfer it from Huobi or any other broker. If you don't know how to transfer yet, then I recommend watching our video. It is on MetaMask, but technically it is exactly the same, even if you're using the Terra Station wallet. So yeah, just download this extension, add it to your Chrome, and then send however much UST that you want to put into the Anchor protocol to this wallet. Once you have this, we can go to the Anchor website. So this is it. All you want to look for is a web app. Make sure you guys are on the correct link. Don't get scammed, especially if you Google search Anchor protocol. There will be a lot of ads out there and they could be scammed. So just be careful. Click on the web app and you can see here is the dashboard. Like I said, $15.2 billion TVL, which is high, 444 million yield reserve. And you can see 9.9 billion deposited and 2.7 billion borrowed. So this is just the dashboard. If you want to take a look at the yield reserve and just monitor it, you can do it right here. The important part that you want to know as a lender is this earn page. So all you have to do is click on connect wallet, connect it to your Terra station wallet, and then deposit the money in. Yes, that is all you have to do. And you basically just hands off from right at this moment and wait for all of our Lamborghinis to come. You can also see the APY right here, which is currently at 19.38%, pretty stable. And they also have a neat little calculator of your expected interest depending on how much you have deposited. Like I said, if you want to protect your deposit, you can click this and it will lead you to some of the smart contracts or dApps that provide this insurance. So you can just click on it and explore if you want to. There's also an option to buy UST directly, but I usually discourage this because it's more expensive. If you're really keen to borrow some money, you can click on the borrow page and yeah, you can decide to provide either Ethereum or Luna and get some UST out. I have personally tried this just for fun. I put my Luna as collateral, I borrowed some UST, and then I put the UST right back into the Anchor earn page, which is basically free money. So yeah, that's pretty much what the Anchor protocol is, what are the benefits, what are some of the risks, and exactly how you can do it in, I think, 3 or 4 very simple steps. So if you want to start and you need somewhere to buy UST or Luna, then like I said, use Huobi. It is a great exchange. I use it all the time. We'll leave our link down in the description below. You can get 5% off your trading fees. Thanks for watching this video to the end, guys. If you guys still have any questions, feel free to leave it down in the comments below. Give us a huge thumbs up and subscribe to our channel if you haven't already. See you guys in the next one. Peace out.